Hello everyone! Today we're talking to our FTMO trader Fabian. Over the past few years, we sent him almost $100,000 in payouts, and that's thanks to his NASDAQ scalping strategy based around high reward to risk and following the smart money concept.
I like to get in around 10 a.m. Eastern time, just because, everyone's probably already knocked out of the marketplace.
Get your notes ready and let's dive right into it. Hello Fabian.
Hey Vitek, how are you?
I'm doing well, thank you. By the way, for those of you who might not know, FTMO is a modern prop trading firm, and we are looking for traders who can manage an FTMO account with up to $200,000. So Fabian here has been with us for quite a while. I believe you started your first FTMO challenge sometime in 2020, so about 3.5 years ago, right?
Yeah, that is correct. I actually started in the month of November, and it was in 2020. It's been quite the journey, but I'm very excited to be a part of FTMO and excited to be here.
Okay, awesome. To give you a bit more details on the actual journey, so up until now, so as for January 2024, Fabian has received about 24 payouts from FTMO, and altogether that made over $90,000. So it's been a ride for you, indeed. Considering I think it took you a while before you got to your first FTMO account. I mean, the time between your first FTMO challenge and when you actually got your first FTMO account and your first payout, it took like a year or something like that.
Yeah, that's correct. So actually, I didn't have any experience in the markets when I bought my first FTMO. And that was the problem. A lot of beginners also make that mistake, and I couldn't figure it out for quite a while. And being stubborn as I am, I didn't want to do demo at all. I just wanted to, get the ball rolling, get
Yeah.
real accounts, live funds, funded accounts, whatever. But it was tough. It was tough at first, definitely, but after, trial and tribulation and many FTMO challenges and a lot of studying, we got through it eventually.
Nice. So, if I understand correctly, you had no previous experience with trading, no history with brokers, with your own life accounts, nothing like that?
So, so I first, when I was 19 years old, I first got introduced into penny stocks. This is the first form of trading that I got introduced to. And it was on social media. I saw some guys talking about penny stocks, and they were posting these huge gains, these massive ROIs. They would get like 50% return on investment, 70%, which I thought was insane. It kind of seemed unreal at first, but I did some investigation. I found a broker, a platform. I deposited some live funds, and shortly after I got liquidated because I wasn't sure of of what I was doing, honestly, but I was excited to make money and get rich. So I
Mm-hmm.
first started with penny stocks, but then after that, I started seeing that there's option trading as well. I think this is like the calls and puts for certain companies or whatever. So I started doing a little bit of that. And when I did that, it was just horrible because it's like time-based contracts, and I was over leveraging, of course. So I lost half of my account within that same day, and this is hard
Wow.
hard-earned money that because I had a 9 to 5, I had a job at the time, and I was just working, depositing money into these live accounts, and they disappeared, faster than I'd take to get the money together. And yeah, it was tough. And then I decided to do a long-term investing, which is where you buy shares of a company and then you hold, and you hope for price to go up, and then you see a small ROI or whatever. But that was horrible as well. I didn't have any luck with that. So then there was this organization that was called I Am Academy, and they introduced me to Forex. And to be clear, I do not recommend this organization at all. They stain the name of trading itself, but I found out about Forex through them, and I didn't have any luck because, you know, I, the people who introduced me to it, they didn't know what they were doing at all. So I was just getting annihilated in all directions of trading. So it wasn't good.
Wow, sounds like a very painful beginning. A lot of experience, a lot of costly experience.
Definitely, definitely.
Okay, so it was that like vision of being a successful trader, of the knowledge of that it can be done, that like kept you alive, kept you in this business. Because like 90% of people, if they had experiences as you had, they would probably say, okay, might be actually smart to get out of trading completely and stop losing money all over again. So what do you think kept you in there?
Right, yeah. A normal person probably would have quit, shortly after those massive losses. But I came across a couple of Instagram influencers or gurus, as you might say, and they kind of kept me in the game because I was looking at their profiles, looking at their videos, and they would be living these lifestyles where they live life on their own time and stuff like that. And then they'd make, tens of thousands of dollars. So I was like, wow, well, if they did it, it's possible for me to do it. It's just that they're well informed and they succeeded in the industry based on the information they were given, the resources, the education. And, um, that's something I wish I would have gone through at first. So I wouldn't have experienced such pain and failure at the beginning stages. But yeah, these guys, they kept me inspired because they were able to do it. So I knew for sure that I was able to do it. I just had to see, that was actually doable. I wanted to see that other people that are in the industry and that are young guys as well, they were succeeding in it too. So that kind of kept me going. And then I found my mentor, and then he really helped me out with everything, and it all changed from there.
Mm-hmm. All right. So, in total, you have experience. So you started. When did you start trading the penny stock? That was in 2019, something like that.
Yeah, yeah. So it was a year. It was a year before I started with FTMO. So I started FTMO around November of 2020. So yeah, it was about a year before, and I tried a lot of different ways to trade. Like I said, option trading, penny stocks, long term trading with shares and stuff, and forex, opening small accounts like $1,000 accounts, $500 accounts, and until I stumbled across FTMO. At first, I thought it was too good to be true. I was seeing that they would let you borrow up to $100,000, $200,000, which was pretty insane to me because I know how hard trading was, so I didn't know there was really these prop firm companies offering that opportunity. So once I read about the benefits and stuff and saw other traders who are involved in these prop firms and their great testimonies, especially with FTMO, a lot of good reviews, by the way. So I got intrigued, and then I went down the rabbit hole, and just I kept the path going with the prop firm industry. So and here we are.
Yeah, here we are. Okay, so enough about the history. Let's get here back to reality in the early 2024. So I've been checking your FTMO accounts and how you trade. So I noticed that you trade primarily the US 100, the NASDAQ index. Is that right?
Yeah, yeah, I trade mostly NASDAQ. It's part of the indices such as S&P and Dow. I used to trade Forex, but Forex is a lot more volatile, and I wouldn't trade like the exotics and like the crosses. I would mostly trade majors. That's what I first started with, and like Euro USD, pound dollar, and I use the dollar index to correlate them. But with the news events like NFP, CPI, FOMC, those kind of took me out of Forex because it was just too violent, and I had to go to the gentleman's market, which is the indices. And yeah, I stuck with NASDAQ because it moves it moves a lot better and a lot less violent, and it also helped me with the risk management. So I do trade just specifically the NASDAQ. Sometimes I'll trade Euro USD, but it has to be a lot of confirmations. But for now, I'm gonna stick with the NASDAQ. That's for sure.
Mm-hmm. Okay, yeah, I've been seeing it's going quite well for you on NASDAQ. So are you more of a technical trader, or are you using the fundamentals, the news as well in your trading plan?
So I'm a scalper. So that being said, I'm more of a technical analyst type of guy, and I use previous data that the chart provides for us to identify levels and stuff like that. So yeah, I'm a very technical analyst. Um, and well, yeah, you could use, fundamental analysis for certain things, but I think that matters more for Forex or, long-term trading, day trading, or if not swing trading. But, for me, I'm a scalper, so, I jump into the smaller time frames and, stuff like that. So I'm more of a technical analyst.
Mm-hmm. All right. Okay, well, I think that's enough for the introduction. And now let's check out how do you actually trade in the strategy part. Connect with other FTMO traders, discuss trading ideas, and simply stay in touch with us. Feel free to join our Discord channel with 40,000 traders now. Now, let's see Fabian's strategy. So, you mentioned that NASDAQ is your favorite thing to trade currently. So, I can see it. You have some sort of indicator, some sort of a splitter for days. Is that something you use? You want to see the different days separated from each other?
Yeah, that's correct. So this is also a nice back testing method as well for for the strategy itself exactly. So let me explain what's going on here. So my time zone is UTC 5, it's New York. So these these vertical lines, are placed at New York midnight, which is, as we can see down here, it's 12 a.m. So they're all placed at the New York midnight of the day separator. So these are all the days that are separated, and it helps me keep track of liquidity and previous days highs and lows and stuff like that. So yeah, I do separate my days for sure, but that's not the strategy itself. Basically, the strategy that I use is it's called smart money concepts. For those that may know, it's a theory on price moving based off an algorithm and always seeking liquidity from the previous session's highs and lows, or the previous day's highs and lows, or the previous week's highs and lows, or last month's highs and lows. So yeah, that's what I use. I use smart money concepts, and I can show you exactly what I look for. I'm gonna go down to last week. We had better data last week, because also I want to be clear that Nasdaq is at also it's at all-time highs. So it's very hard to predict what can happen now. My guess is just buy just keep buying until we're wrong, because Nasdaq is at an all-time high, as well as the Dow and the S&P. So we have to be very cautious as well. But for scalpers, that shouldn't really matter because we are in and out. But let me explain to you what's going on here. So my strategy consists of liquidity. So what I meant by that is, let's put Monday for example, right? So Monday we have this high, and then we have this low. So I use this range to work with for Tuesday. Now let's say we're in present Tuesday trading day, right? We have this low, it's swept, and it basically juked out all of the sellers because broke supports. Retail thought it was dropping, and shortly, it started rallying back up, going to New York Stock Exchange Open, provided entries on a smart time frame, went up again. And as what we can see here on Tuesday, once we swept Monday's previous high, which was liquidity, it reversed, it went down, and like I said, smart money concepts basically consists of liquidity, and every time liquidity is taken out, it can either be a reversal or or it can be a retracement to continuation to where order flow is heading on the bigger time frame. So yeah, that's kind of how I separate it. But in terms of technical analysis, I do start always at the monthly, for example. But what's going on here, like I said, we're at all-time high, so it's kind of hard to see what's going on the monthly, especially for the indices. So the smallest time frame would probably be the daily. But
Mm-hmm.
as we can see, there's not a lot of past data to work off of because we're at all-time highs. So probably the best time frames for the Nasdaq currently, especially knowing the market conditions, would probably be the 4 hour, the hourly, 30, 15, and just drop into the smaller time frames. And but yeah, that's little a brief introduction of how I view the market, specifically for the indices.
Okay, so you mentioned you're a scalper. So for how long do you usually hold your positions?
So on a good day, I usually hold the positions for about 30 minutes to an hour. Sometimes it can go from an hour, 2 hours. It just depends how fast, we're moving that day. But I do have entry techniques for the scalping strategy. For a lot of people that may know, they're called fair value gaps or breaker blocks. It's just a bunch of ICT concepts that a lot of other ICT disciples would understand what I mean by these entry techniques. And these entry techniques, they usually happen on the smaller time frames, such as the 15-minute, 5-minute, or the 1 minute. And basically, I wait for a confirmation. I need to wait for liquidity to be swept on the buy side or the sell side liquidity to be swept. After that, I either look for a retracement to continue order flow, or I look for a small scalp reversal. But what I do, I want to make it very clear. I scalp around 50 points on the NASDAQ, and with a stop loss of around sometimes 30 to 40 points. But it just depends on where my entries were at. But that's basically how I scalp. I go for around 50 points, take profit, 70 points. But that's what it consists of, the
Hmm.
scalping.
Okay, so you're always trying to keep the positive reward to risk ratio to always, potentially gain more than you can lose.
Yeah. So let me explain kind of like how my risk management works. So I have this method that I learned from my mentor. It's called pyramiding. What pyramiding means is, when I enter my first position, let's say, for example, I enter a position for a buy, right? I start at a 0.5% risk of the account for that position. However, when I find reentries towards that same move, I'll actually stack another position, as you may say, and I will double the risk from 0.5 to 1% now with two positions. And I would call that a level two pyramid. And and so on, so on. Sometimes I go up to level three pyramid, which is 1.5% risk, level four pyramid, which is 2% risk, and sometimes, pyramiding like this, it can give you the huge risk reward ratios, because my first initial entry, it was risking 0.5. Then I'm like 10, 15 points in profit. I added the second position. And now, I can shorten my stop loss for my better position, and, get these nice risk reward ratios, 2 to 1s, 3 to 1s, 4 to 1 risk reward ratio. And yeah, risk management is very, very important, especially with the rules that we have to work with the prop firm industries, FTMO's rules and stuff like that. So yeah, risk management is very important, and it's something I didn't know how to do at first, but I'm really glad I was able to figure it out in terms of risk.
Okay, so from what I understand, your strategy is based on often looking for retracements from some certain moves. So are you, for example, working with the news events as well? So when you see that there's I don't know, let's say CPI, PMI, something like that. Uh, are you trying to scalp that sort of a result that often comes after these announcements?
Um, so here's the thing. I try to avoid these news, such as CPI, FOMC, NFP. I try to avoid these. Like, let's say, for example, in my time, CPI is at 6:30 a.m. I won't enter. I won't enter around that time at all. I'll kind of wait for the New York Stock Exchange to open, which is 9:30 a.m. Eastern time, and I'll wait for a range to work with, because I can't just trade the news range and the volatility, because It can take you out pretty fast, and especially if you're over leveraging, it will get you out of there pretty quick. So I've learned to, definitely stay away from news. Sometimes I'll trade it. I'm not gonna lie, I will, but for the most part, I like to, trade normal days.
Mm-hmm. Okay. Now, how often do you actually trade? How many trades do you take? Because I've been checking your past FTMO accounts, and you often take just a few trades before the payout. So it's not like you would be making 10 trades every day.
Yeah, that's right. So Um, before when I had smaller accounts, I would my trade frequency would be fairly high. I'd be trading a lot. I'd be inputting probably 50 to 60 trades a week. But I was just trying to pass accounts. I was trying to get funded and get payouts and stuff. But that wasn't really the way. What I really learned is being patient, waiting for the setups, and having the trade frequency very low. You don't want to input too many trades. I'll probably, enter, I'd say like 5 to 6 trades average a week. So maybe like one trade a day. It just depends, like I said, and especially on the NASDAQ, since we are at all-time highs. I haven't been trading as much because I want a new range to form, and I want to kind of see what I'm working with here, because we've never seen the indices at all-time high, so it's totally unexpected of what can happen. So yeah, my trade frequency will be very low going forward until new ranges form and I have liquidity, past liquidity to work off of.
Mm-hmm. All right. So maybe let's recap your strategy a little, something that you've been mentioning in the beginning of this part. So, are you always working with the range from the previous day? So if you let's say if it's a new trading day, you're starting your trading session with the top-down analysis. So, you always highlight the previous day's low and the previous day's high.
Yeah, yeah. So that's basically what I do, but I also want to be very clear. So also, as we know, the indices, the New York Stock Exchange opens at 9:30 a.m. Eastern Time, and what I highly recommend is from 9:30 a.m. Eastern Time to when the New York Stock Exchange opens to 10 a.m. Those first 30 minutes of open, increase a lot of volatility, a lot of juking, a lot of uncertainty. So I like to get in around 10 a.m. Eastern time, just because everyone's probably already knocked out of the marketplace. And yeah, yeah, I do use previous days liquidity, previous sessions liquidity, highs and lows specifically. That's why I separate my days so I can literally see, Monday's highs and lows, Tuesday's highs and lows, Wednesday's highs and lows, and as soon as I see one of those lows or highs, swept, um, then I started looking for potential entries for a retracement to continue, or a reversal. But like I said, I'm a scalper, so most of these scenarios do be hitting, just because I don't really day trade or swing the trades itself. But yeah, noting the previous sessions highs and lows, previous days and previous weeks highs and lows is very important, especially for the indices specifically. It could work on forex. I'm not saying it doesn't, but I've been doing well in the indices, so
Mm-hmm.
that's
Okay.
that's kind of what it is.
Now, one of the last questions here that comes to my mind. So, let's say hypothetically that you are entering a new trading day, and you see that the price breaks the previous high of the previous day. Uh, what confluences are you looking for that are gonna tell you whether there's gonna be a retracement or if the price is gonna keep going upwards?
Yeah, so let me try to use an example here. For example, so this area right here, I'm gonna draw a horizontal line on this previous high. Okay, so we're gonna use this example. So this high, it's noted. Let's say we are in Monday or Tuesday. Let's say Monday, for example. We have this high noted from Thursday, last week Thursday. No, no, I don't think it's last week Thursday. It's yeah, it's a January 11th high. Okay. So right here, we came close to sweeping the liquidity, which it left this liquidity pool open. Usually when the algorithm likes to target previous highs or lows, it will rip through it just so buy stops or anything can get triggered from the retail and take them out. So let's say, for example, this high, look, I'm looking to take out this high for this week, for the new week. So Monday, it didn't quite happen, but it kind of went to a discount. Also, I used the Fibonacci tool. Let me slap this on. So look, I'm gonna put the Fibonacci from this point right here, and I'm gonna put it to this high right here. But I'm gonna extend it. So basically, it was the price run from this low to this high. I put the low of the fib tool right here, the high right here. So what we see here on the fib, it's the 50% level, which is the equilibrium, or the 71% or the 78% retracement. What I like to consider a discount for buys would be the 71, 78. So as we see that we have this range noted, we had a retracement to a discounted level, which was 71, 78 right here on Tuesday, I believe. And it really respected the discounted level. So obviously we're supposed to buy at discounts and we're supposed to short at premiums. But however, I had this level up here noted for liquidity, for buy side liquidity. So I was looking to take that out. And we came close on Tuesday. It just didn't quite get there. And let's say Wednesday, for example, Wednesday it failed to do so. It took out sell side liquidity. So we're going to draw a horizontal here for this low as well, because this range from here to here, this is a very important range. So I'll put a horizontal line here. This is sell side liquidity. So for Wednesday, we created the low of the week. We swept January 11th low. And as we zoom in right here, once we swept this sell side liquidity, we can throw another Fibonacci on the smaller range. So we'll put wrong side. So I'll put the fib tool from this low to this high. So let me make this a little bit better. So okay, so from this low to this high. Okay, so as soon as we swap sell side, which is this black horizontal line, we can expect a reversal or retracement to go lower. However, in this scenario, how it unfolded, we swept sell side liquidity, we came up, it failed to go higher, and then it came back to a discount. So from this range, this smaller range, we came back to a 71% retracement, which is a discount buy. So this would have gave me, the confluences or the confirmations to follow a buy. And then especially as we see price climbing over here, we have a market structure shift. So that's just beautiful to see, because it created a leg, but now we start seeing it break structure. So that's a great confirmation as well. Market structure shifts, especially on the 15-minute time frame. And also, it's fair value gap entries as well. I believe I took a trade on this day. Let me go back to it. Yeah, so it's right here. Let me zoom in. So this is that same range right through the fib from here to here, right? So we had a confluence, first discounted 71% level, market structure shift up here. Then over here, I believe we jumped into some fair value gaps. I think it was on the, let me see what time frame it was. So fair value gaps are entry techniques, by the way, for those who don't know. Let me try to show an example. So, okay. So yeah, I took this trade. It was a very small trade, but so basically, I got in when I started seeing it climb up here again, and it was a very small stop loss, but at 30 points, I wasn't too sure what price could have done. So it was a scalp, but I do like dropping the Fibonacci and looking at my discounted levels, looking at my premium levels for shorts. I'm better with buying, so I like seeing the discounted levels, and I'll take those buys all day.
Mm-hmm.
But yeah, that's pretty much kind of what I do. I kind of wait for a huge liquidity pool to be taken out, previous sessions or previous days highs and lows to be taken out. I drop down to the 5-minute or the 1-minute, and then I look for entry techniques such as bullish breaker blocks, bearish breaker blocks, fair value gaps, stuff like that. So it's very interesting. It's very different every single day. So you don't know what you're gonna get for that day, but that's why experience plays a big role in this, because then you'll be seeing the candles unfold in front of you. So seeing that, and journaling, especially, journaling helps a lot, especially for your losses. When you take losses, you should be journaling. So yeah, that's kind of what I do.
Mm-hmm. All right, awesome. Thank you for this complex breakdown, Fabian. And now let's take a brief look into your account matrix. Right, here we are in the account matrix of one of your FTMO accounts. This one is particularly from November, so about 2 months ago. So here we can see that things were not going well for you from the beginning. You even went to a loss. So do you know what happened there? There's been a lot of consecutive losses.
Um, on this account specifically, or are you talking about in the past?
No, on this account specifically.
Oh, okay, okay, yeah. So let's check out this account. So this was during November of 2023. It looks like I got some cushion on the first day of trading. Then I took some pretty consecutive losses, some pretty big lot sizes. That's probably the reason why, if I'm not mistaken. But yeah, I started slowly making it back up, and taking smaller losses, learning from my mistakes. These losses here are a lot smaller than the ones we saw at first. And yeah, November 27, we had an amazing day. It was 7% profit, I believe, on this 200K account. Let's see. I kind of want to see which pairs I was dealing with. Yeah, so I was saying earlier in the interview that I'm mostly a buyer, so
Mm-hmm.
that kind of shows that. Oh,
Okay.
okay, yeah, yeah. So NASDAQ, so NASDAQ and a little bit of some euro action right here. So yeah, I should have been a lot more careful with this account specifically, because this is the account that I did get scaled up for having it for 4 months, getting a couple withdrawals and having more withdrawals than 10% totaling. I believe that's when they scale it up.
Mm-hmm. Yeah, 10%.
So yeah, yeah. So I should have been a little bit more careful in terms of risk management, but I'm glad. This was a very good month, but yeah.
All right. So if you could scroll back up a little bit so we can see the stats on your max daily loss and the profit. Okay, here we are. Okay, so yeah, seems you've been very comfortable with both limits. You didn't need nowhere as much as you could have lost. So only 2% daily loss and around 3% overall max loss. So that's very well done. Now, if you could scroll a little bit further down, let's see what we have here. All right, so reward to risk 2.18. So that's what we've been mentioning in the beginning, right? So keeping that positive reward to risk ratio, even though the win rate was slightly below 50%, thanks to that high reward to risk, you managed to end up in a very nice and profitable manner. And yeah, what else do we have there? If you could scroll maybe to the bottom of the page, let's see the stats there. So yeah, all US 100, all NASDAQ pretty much.
Yeah, yeah, we took some good sales here on these days. I'm not much of a seller, but
But what's
um,
interesting here is that you see a scalper, but those trades were held for 4 days and one for 2 days. So,
yeah, yeah, it was a very special occasion for this. I'm talking 4-hour confirmations, hourly confirmations, and I do have a trade plan where I do normally scalp. However, before I entered this trade, I knew I was probably gonna have to swing these ones, or at least we're talking these guys, right? So I had to swing them, and that was the plan at first. I usually before I enter the trade, I gotta know if I'm a scalp or if I'm gonna hold it for a couple days. It just depends on where we're at on the bigger time frame. But for this scenario specifically, yes, I held these for quite a while, which I normally don't do. I don't really recommend. It's better scalping. You get more opportunities daily, and that's kind of how you get past FOMO, or if you're missing out, if you're a scalper, because there's opportunities every day. You just need to submit to the fact that there's opportunities daily. And yeah, it was a very special scenario. Like I said, I don't usually swing, but I'm very glad this swing that I haven't taken in a while played in my favor. So very happy for that.
Great. And well, as you were speaking of fear of missing out, let's touch upon that and talk a bit about the trading psychology. If you enjoy our videos, please consider subscribing to our YouTube channel. Thank you, and let's talk psychology. Just a minute ago, you've been mentioning a fear of missing out. Has that been the biggest obstacle regarding psychology you had to overcome, or was there something else?
Yeah, so there was actually quite a few. There was quite a few, but fear of missing out was definitely one of the biggest ones, just because I always thought that I had to catch the move that was unfolding today, and this was due to lack of experience, due to the fact I wasn't in the marketplace long enough, and I wasn't able to submit to the fact that there is multiple opportunities daily. So yeah, fear of missing out was pretty bad, and that also caused me to over leverage, over trade, and if I take a loss, I'd get right back in just because I see the candles. The candles would be saying one thing, and I think this is the right move this time, but I soon realized that I had to discipline that because it was destroying my trading plan, and it was horrible. So yeah, the fear of missing out, you have to discipline that emotion, because that can lead to other problems. Like I said, such as over trading, over leverage, revenge trading. You just have to wait for the setup, and you have to know that there's multiple opportunities daily, so you can't have the fear of missing out, because the market provides multiple opportunities day in and day out, especially if you're a scalper.
Mm-hmm. Okay. Now, speaking of the present, what are your maybe weaknesses you would say regarding the psychology? Like, do you have something that you're aware of that you are not good at regarding the psychology? Mainly if you have a bad day, you know that you tend to revenge trade a lot, and you are trying to battle with it now, or do you think you have pretty much mastered the psychology at this point?
I wouldn't say master, but I want to make it very clear that on those days where I would lose very badly from revenge trading, doing some dumb stuff on the charts, I'd like to go outside, get some air, go hit the gym, read some books, get your mind off trading, because if you're always thinking about the marketplace, that's not healthy for your mind. And it can lead to other problems, like depression, and other types of stuff. So you have to find other hobbies outside of trading, especially when you take these big losing days. So yeah, you really have to discipline these emotions, and as you get more experience, you definitely start disciplining your faults, and you become a better version of yourself through trial and tribulation. So that's a very big thing in terms of psychology.
Mm-hmm. All right. Well, I think that's all we really have time for today. So, Fabian, thank you so much for being here on today's interview. It was very nice. And if you have anything you want to say, if you want to give shout out to anyone, now is your time.
Yeah, I wanna thank God, my Father in heaven, for giving me this opportunity, and giving me the wisdom that I needed to succeed in the financial markets. And also, I wanna I want to shout out my mentor. His name is ICT. He provided me with all the education that I needed. So I'm very grateful for what he's done. And without him, I wouldn't be where I'm at today, because I had zero odds in my favor in the marketplace, using indicators, moving averages, EMAs, Bollinger Bands, like all these retail indicators. None of it was working for me. So my mentor really cleared all that up, and really helped me get get some odds in my favor in terms of trading. So very grateful to have him. So yeah, and but I do advise beginner traders or the newbies to stay away from big organizations who have a retail mindset, as well as look, I'm not saying retail indicators or patterns don't work. They could work using good risk management, but if you really want to learn trading, I suggest you learn smart money concepts. It worked very well for me. I'm being consistent to this day, so I'm very glad I found smart money concepts. And I just advise all these new traders to stay away from these huge communities. Taking signals as well. I don't suggest you should be taking signals. If you want to be an independent trader, you have to, yeah, you have to learn a good course, and then, and journal and back test, and learn through trial and error and experience. You need experience in the charts. You got to see how candlesticks are forming live and stuff like that. So I advise them to be very smart who you learn from, because I made a lot of mistakes, and I want these viewers to avoid the pain um, that I've experienced in the past, because I was using almost all the before I became profitable. I was using all the indicators available, all the patterns, and I even bought a EA robot that was trading my prop firm accounts, and it was just liquidating everything, like 100% failure rate, and it costed me a couple thousand US dollars to buy that EA. So I advise you guys to stay away from that. It will save you a lot of time. So that being said, just this industry is very hard, and especially when there's influencers, gurus, and stuff like that. You want to learn from the right people, and you don't want to get too attached to communities, because it builds a hive mentality, and you become kind of a sheep if you're not aiming to be a self-sufficient trader, which you should be. You should be the author of your own trades and stuff like that. So yeah, that's what I advise.
All right. And that's FTMO. Huge congratulations to Fabian again. It was a real pleasure to have him on. Enjoy your day, everyone, and I hope a similar trading success is awaiting you too. Goodbye.